In this video, I'm going to be providing you with a 3-step trading plan that you can use to trade London session for 60 to 90 minutes per day. This strategy helped PJ get funded 400k with FTMO last month, and it also helped Gareth pass 2 funded accounts for 2025 already. I'm going to be addressing one of the biggest mistakes that I see traders make when trading London session, which relates to how they will typically use a sweep of Asia high or low to dictate their bias for the rest of the session. That then leads to them getting stopped out of their positions in markets like this here. But I'm looking for longs after we've traded above Asia high. Just because we've traded above Asia high does not mean that we can start shorting the market, as I will show you later on in this video. There is a much simpler way to look at markets than just a sweep of Asia high or low during London session. So stick with me in this video and I'll show you how to increase your strike rate during London, and I'll show you some live trade examples of the strategy as well. This video will aim for 1,500 likes and we'll drop a backtesting video trading this strategy during London session. So subscribe, like this video, and turn on notifications so you don't miss out on that one. Now let's get into this video and I'll walk you through the process of this London trading strategy. Also, look at the results that are possible just from what I teach here on YouTube. If any of you are getting results like this, make sure you send them to me because it inspires me to keep creating content like this. So during London session, I trade both RTR and RTC trading models. Everything is rule-based. We have a 3-step process to identify which trade to take, and which I will walk you through during this video. The link to this trading plan is down in the description below, so get your copy so you can follow along. But during London session, or markets in general, there are 2 scenarios. We have option 1, which is our London reversal. This is what most traders look for when trading London session, and is why they are not consistent with their results, because this doesn't happen every single day. As I said earlier, just because we've taken out either Asia high or low, it does not mean that we have to reverse. We just want to use Asia liquidity in London, or session liquidity in general, as an extra confluence for our trades. We do not want to use it for our bias and get caught trying to catch a falling knife when option 2, the London continuation, plays out. So price trades outside of the Asia session range, as you can see. We trade it above. So many people will be trying to short this, but we just come back into a bullish fair value gap and then deliver higher into buy-side liquidity. This is one of my favorite setups. I much prefer trading this model right here than trading the London reversal, because when you're trading this, you're on side with market structure already. So ask yourself this question: what matters more, market structure over the past few days or week, or your Asia session market structure over the past few hours? So let's get into the 3-step strategy and how you can trade either scenario during London session. So first step is time-based liquidity. As I always say, mark out your previous week high and lows, your previous day high and lows, session, and also your market structure, which we'll get into in a moment. So over on my charts here, what you'll do is just come up to your daily time frame, mark in your previous day high, and obviously your previous day low all the way down here. Go up to daily time frame, mark out your previous week high. In this situation, you wouldn't need it because we've already traded through it. And your previous week low probably isn't of much importance in this situation. So nothing's discretionary here, all completely mechanical levels, just using time-based liquidity. Then come down to your lower time frames, and you can see that we've got Asia session range drawn out. That's done by ICT kill zones and pivots by trade for op. Always use GMT -5, New York time zone. That is what we relate to when trading the market. Also, these session times here, that's the most important thing. So on to step 2, we have market structure. Identify market structure on the 1 hour and the 4 hour time frame. Okay, it can be either or. And then all you're looking for is price to trade back into a fair value gap within that market structure. So here you can see we're creating higher highs and higher lows. The simplest concept within trading. Everyone knows how to read market structure, right? So just find your trend, find your higher low and your higher high on the 1 hour or the 4 hour, and then just wait for price to trade into the 1 hour or 4 hour fair value gap in between the higher low and the higher high in this scenario. The same thing goes here, but there's one difference between these 2 charts, and it's just basically showing you the difference in London session that we can get. Here you can see we get a London reversal where London trades into the fair value gap, sweeping Asia low, and then we trade higher. Here you can see that Asia trades into the fair value gap, and then we get a London continuation of the Asia reversal. Okay, so obviously in this situation, we wouldn't be shorting a sweep of Asia high because markets are bullish, right? So on to step 3, which is just your reversal checklist, and then obviously continuation checklist as well. Once you've identified your market structure, you drop down and you wait for either a reversal or a continuation. So a reversal, you're going to be trading with 1 or 4 hour trend, and then you're going to wait for Asia high or low to get swept, and then you get enter with an inversion or change in state of delivery, and then you're going to target 2R or Asia high, whatever that may be. I'll show you some examples in a moment, and then stop loss behind the displacement length. Continuation, there's a video linked in the description below that goes through this in a lot more detail, which you guys loved. Train with 5 or 15 minute trend, price trades into a 5 or 15 minute fair value gap, and then wait for confirmation out of that fair value gap. Okay, so that's the difference. Here, you're going to be waiting for price to trade into a 5 or 15 minute fair value gap. Here, you're going to be waiting for price to trade into the higher time frame and sweep Asia. So let's show you some examples on the charts of this. So example 1, here we are on the hourly time frame. Yesterday's price action, we took shorts during London session, and I'm just going to walk you through this one. Buy side liquidity has been taken out. This is the high, this is the low, this is our hourly gap. So if we refer to market structure, it's obviously the opposite to this because we're going short rather than long, but obviously we've got our high, our low, and our internal in terms of this fair value gap. Drop down to the lower time frames, and then we're going to wait to see what price does going into London session. Okay, so London session is 2 till 5 New York time, and here you can see at London session we trade into a small liquidity point here, but also what we have is another hourly fair value gap. So we're bearish overall. Hourly time frame is bearish. So what we're going to expect, we're going to expect price to deliver from bearish PDRAs, bearish fair value gaps in this example. So price trades into that fair value gap. So what we're going to look for now is our entry. How do we decipher an entry in this situation? Well, continuation checklist, trading with 5 or 15 minute trend, price trades into a 5 or 15 minute fair value gap, entry confirmation with inversion or change in state of delivery. Okay, so we're going to enter with confirmation of an inversion fair value gap. So in this scenario here, we inverse this fair value gap, I believe, because this was only yesterday's price action. We traded this within the group. And then you get a close below that fair value gap, stops at the high, and targeting this low down here. So we can sell, stop loss above, TP at the lows, and then we trade lower. Next option, 5 minute fair value gap. Okay, so this comes into the continuation model once again. And if you guys refer to my latest video, you'll know exactly how to trade this model. And it's just waiting for confirmation after breaking below what? A bullish PDRA again. In this example, a fair value gap. So we can sell, once again, stops above highs, targeting these lows. And as you can see, price trades lower into this sell side liquidity or Asia low for 3.6R in that example, okay? And what you'll notice here is we didn't sweep Asia high before getting into short positions because it's a continuation of what is already playing out. Asia has already traded into this 1 hour fair value gap. So Asia's already put in the reversal. If you refer back to step 2 market structure, Asia has traded into the fair value gap. We don't need to trade back into that fair value gap. We've already rebalanced to it. We just want to catch continuations into the higher high, or in this scenario, the lower low. Okay, so there you go, 3.6R on euro dollar during London session. So let's look at another scenario. Once again, we need to map out our market structure. So high, we can use as buy side. Low, we can use as sell side. And then where's our fair value gap? Our hourly fair value gap is in here. So this is where we want price to trade into to look for trades into this sell side liquidity because the hourly is bearish. There's no reason trying to fade this. So we drop down to our lower time frames during London session and we wait for price to trade into that fair value gap to then catch continuations, hourly internal to external. And there you go. Once again, you can see a bullish fair value gap has been inversed out of where? Out of the hourly fair value gap. So once again, we can take shorts from here on that inversion, stops above the highs, targeting this hourly low, hourly internal to external. And price trades lower, completing that for again, what was this? I put a plus 2.4R move. And again, we took this trade. I'll post a screenshot here if I can find one of this trade taken within the live sessions. But what's the other trade that we are going to be looking at, okay? We're going to be looking at a reversal, okay? So this is the main one that you guys like to trade is a London reversal. London trades into that fair value gap, sweeps Asia high or low, and then we trade away. So let's take a look at some examples of reversal trades. So here we've got an hourly fair value gap. Once again, higher highs and higher lows, just like the example I showed in the PDF. And as you can see here, at the start of London session, we're trading below Asia low. But that's fine because this is with our higher time frame bias. We're not trying to fade a higher time frame trend. So what we're going to do is target this previous day high up here. And obviously Asia high is our first target. So let's wait for an entry. Obviously we've taken Asia low. We need to wait for an inversion during our London open kill zone, 2 till 5 or 2:30 till 4 is what I personally trade. And there you have on the 3-minute time frame an inversion off of Asia low inside this high time frame fair value gap as well. Obviously the hourly hasn't closed, so we haven't traded below that gap. We're still respecting it on the hourly time frame, which is what matters. So trade setup here, targeting previous day high for 4.6. Let's see how this one plays out. And as you can see during London session, what is that? 2:20 until 3 o'clock, 40 minutes plus 4.6R trade. Okay, textbook position. I'll show an example of this as well from the Discord. And then our fourth example of this trade. Obviously, I'm showing you guys examples that have played out to perfection. There is going to be losses, but you guys get too focused on people trying to show their losses. You want to know what a good setup looks like, and you need to ingrain that in your mind and train your eyes to see a good setup. I'm not going to show bad setups because this isn't a backtesting video. This is a video showing you the model in play. So once again, what's the narrative here? We've got this 4-hour fair value gap this time on GU. So we're trading GU in this situation, and we drop down to our lower time frames. And once again, we can see a reversal setup that occurred here. Another trade that we personally took. So once again, you've got this 3-minute inversion. And you're going to target where? Asia high is your first target, of course. But realistically, you're going to be looking to target previous day high. Previous day high is all the way up here. So previous day high gives you a risk reward of like 3R. And let's see how that one plays out. And there you go. And throughout London session and into New York session, we trade higher. And once again, that's a London reversal because we've taken out Asia low. We've already traded for away from this 4-hour gap, so that's not necessarily an issue. But the overall narrative is 4-hour internal towards 4-hour external. So that's why we look for a sweep of Asia in this situation, because it's with our 4-hour trend, our 1-hour trend, whatever that may be. Okay, so if you guys want access to this trade plan, make sure you download it down below. Let's get this video to 1,500 likes and I'll show you a backtesting video of London session. But the New York backtesting video for the video linked in the description below as well, it will be coming out within the next week. So make sure you turn on notifications so you do not miss that one. And if you want to join the Rise Trades Club, then make sure to head over to there for some New Year deals as well before the next price increase. So I shall see you guys on the next video. Any questions, drop them down below. Make sure to like and subscribe. And I'll see you on the next one.